Hello friends, welcome to your YouTube channel The Trading Couch. This video will basically be giving you information and learning about the weekly roundup on trading in Nifty. We will be discussing some of the best trades taken in the past 5 days, the logic behind those trades, the execution of those, and importantly the risk management behind such trades. Do watch the entire video to learn some of the best trading setups using the CPR indicator along with the 21 period EMA and Fibonacci tool. We have also relied upon the concept of demand and supply zones. Don't miss out on watching and learning one of our trademark setups, the sniper setup or the Sukhoi setup. The named after the fastest jet aircraft in Indian Air Force. You must be wondering why I have named it in such a fashion. Do watch the video and find it out yourselves, like how the price flies from the zone. So buckle up and enjoy the video. On Monday, the 13th of March, the index was on the weaker side, the reason being the negativity in the global market because of the banking crisis in US and Europe, and also there was a huge gap down in the previous session. All this indicated a weak market sentiment, and if you closely observe the index on the higher time frame, then you could identify that the chart pattern is indicating bearishness. That is, you can identify a downward double top pattern, and the price was near its make or break level. That is, the price could either move up from this level, showing bullishness, or it can break this level, and once this level is broken, then the nearest support for Nifty was almost near. One is the psychological figure of 17,000, and if 17,000 has been broken, then the next support is this gap area that previously Nifty had given the gap during the bullish run. So we usually call this the breakaway gap. So this gap can act as a support. So let's find out whether these levels played out in favor of the trader. So now let's see how the trade could have been taken on Monday. The index opened flat, and right after the open there was a huge bullish candle. Now the question is, the market is showing bullishness, so do we have to go long? The very simple answer is we have to wait for a price action. Generally, when there are such huge candles, it is better to stay quiet and wait for the price action to tell you what direction the market is going. The best way to find out is the Fibonacci tool. If this bullishness remains to be strong, then there will be a strong pullback near the 50% zone or the 60% zone. So this zone would become very important and crucial for us to determine whether the price is going to go up, or is it just a fake breakout where it is going to trap the bulls and continue its movement downwards. So this zone will be very critical for us to take a decision. So now let's see how the trade was poised on that day. We always have to wait for a proper pullback to confirm a bullish or a bearish sentiment in the market. Generally, the pullback should be nice and easy. Okay, this kind of nice and easy pullback pattern indicates that the scalpers or the day traders or the BTST traders are booking their profits after the first candle. So if the pullback is steep and sudden, like the one that we are witnessing here, this indicates this price pattern indicates that this is more of selling pressure than profit booking. Price attempted to go up several times but failed to do so. Okay, so the market sentiment was bearish, but still we are not entering any trade because we have to have a proper confirmation near the critical zones, that is the CPR and the present day low. So once the candles break this zone, then we'll be taking our entry. Now you can see that the CPR has been broken and the present day low is also broken. We just need a closing below that level, and then we'll be entering the trade. So here we have one strong bearish candle closing below the CPR as well as the present day low. So hence we'll be entering our trade here. And once your target is hit, you can trail the profits till this 21 EMA is broken. So like that way you will be able to capture huge profits when the market is trending. So you can see that our exit would be here, and uh, from our initial trade of 1:2 we have booked 1:5. This was the best trade that was taken on 13th. So let's move on to the trading session on Tuesday. The index opened flat and took support from the previous day low. At the same time, you can see that the price was rejected from the CPR. The price was rejected from the CPR, and the next candle gave a strong closing below the CPR. So this is probably a very good entry, keeping the resistance 1 or near the identified support zone as the target. And let's see how the trade played out, whether it was in favor of us or against us. So you can see that the index tried to go up, but the same resistance level, it again formed an inverted hammer candle and continued to go downwards towards the support zone, and it gave our target as well. So this was the session on Tuesday, and one single trade could make us a good profit in the index. Okay, now let's move on to Wednesday's session. Before starting the session, the important zones have to be marked. So let's start off with that exercise. So you can see that there is a sharp fall from this area. You can see that this sharp fall from this area. So this will be our important resistance zones. So this will be our important resistance zones. And as usual, the previous day high would be one of the resistance zones. Then we have our virgin CPR here, a wide virgin CPR. So hence this region would act as a strong resistance, and if market opens above this zone, then the virgin CPR or the previous day virgin CPR and the previous day high would continue to act as a strong resistance zone. So hence it is very difficult for the index to move up unless and until it has a strong momentum and a strong reason to go up. So let's wait, and we are bearish in the market, and we'll see what trade can be taken. Unless our levels has been satisfied, there won't be any trade taken. So let's begin. The index gapped up and has been facing rejection from the previous day high. So our trade will be executed only when there is a strong bearish candle somewhere below this zone. So unless and until that is broken, there is no trade. Here we have an inverted hammer formation with a weak rejection from the resistance zone. Hence we would enter the trade here. So from the right perspective, the trade was executed, and the trade target was achieved. So let's move on to Thursday's trade and see what was stored in there for us. So now let's move on to Thursday's trading session. The important zones remains same for this trading session as well, and this session we might have a wide CPR, and if the price is away from the CPR, then the price will have to have the tendency to get attracted towards the CPR. So let's trade cautiously in case the price is too far from the CPR. So on the market open, we got a formation of a long bearish candle, taking out the support zone which has been marked and also being rejected by the 21 EMA. Hence we shall stick to our rule of Fibonacci ratios. If the price is rejected from 50% of the long candle, then we shall take a short entry with the target being the next resistance. So here we see a long wick rejection from the 50% Fibonacci zones. So we will take a risky entry here with a minimal stop loss and target being the next resistance. So let's see how this trade is going to play out in our favor. Thus the target was hit. Next, let's wait and watch if we'll get any other trade. You can see the long wick rejections from the R1 zones here, and they are in the verge of forming a double bottom pattern. If the price breaks the neckline, then we shall take a long trade with the target being the CPR. So here our conviction is that the magnetic trade of CPR that we have learned will work here and turn in our favor. So here you can see that the neckline is broken with a strong bullish candle, Hence, we take entry immediately with the stop loss being 50% of the previous candle. You can see that the target was hit and the CPR magnetic trade worked in our favor. So now let's move on to the Friday session. The Friday session was one of the important sessions where we got to learn one of the beautiful concept, and we termed it as the SUKHO trade setup. Here what we do is, from the previous day's session, we mark the areas where there was a sharp increase in price. Like for example, here there were two areas that there was a sharp increase in price. One is this area where there was a sharp increase in price, and another one is this area from the previous day low. There was a sharp increase in price up to the CPR. So here we call this zone as the demand zone, and assume that whenever the price reaches this area again, there will be buyers who will be sitting there with their entries marked. So this is the area where the price flies from the zone the moment it reaches. So that is why the name SUKHO trade setup has been given. So let's see how the trading session on Friday played out with us. So you can see that the first candle formed with the wick rejection from the resistance zone that has been marked. So we assume that the price is going to reach the SUKHO zone, and this SUKHO zone is in confluence with the CPR, so this can act as a strong support zone as well and drag the price towards it. So hence, based on that conviction, the moment there is a closing below this candle, we'll be taking a short entry. So here you can see that there was a strong closing below the first bearish candle. So here we'll be taking our entry, and with the stop loss being the day's high and target being the CPR. As you can see that our target was hit, and now that the price had reached the SUKHO zone, we want one strong long bearish candle to be formed here, and the moment the bearish candle is closed, we'll be entering the long trade. So here it is purely based on the conviction trade, and if at all the stop loss is hit, it will take our 5 points, but the reward is very huge. So SUKHO zone or SUKHO trade setups are such trade setups where you will have the least stop loss, but the rewards are the highest. So here you can see that there is a long bearish candle that is formed here. So we'll be entering trade in this zone with the target being the R1. So thus you can see that how the price flew from that zone, and this is why we call it as the SUKHO zone, as SUKHO is one of the fastest jet commissioned in Indian Air Force. We are proud to name this trade setup in that name, and hope so the price always flies from such zones. So that's it guys, this was a weekly roundup of the trades that we took in Nifty, and it was a wonderful week for us, and we got to learn so many things and so many trade setups, and the confidence started building in us that our trade setups are working in our favor. Thank you.